Hello and welcome back, everyone. I hope you're having an incredible day so far. Today's video brings major news for millions of Americans receiving Social Security benefits. We're talking about a potential $4,000 financial boost that could be coming your way within the next couple of months. But there's also another burning question: what happened to the idea of no more taxes on Social Security benefits? Has that proposal hit a dead end? Or is there still hope? There's a lot to unpack in today's update, including the latest legislative developments, reactions from lawmakers and the media, and what it all means for you, the Social Security beneficiary. So stay with me as we break it all down, step by step. Let's begin with the headline: a proposed $4,000 boost for Social Security beneficiaries. At first glance, this sounds like a direct payment or a one-time stimulus check. But that's not exactly what's happening here. What lawmakers, specifically House Republicans, are proposing is a $4,000 tax deduction for seniors aged 65 and over. It's not a direct deposit into your bank account, but rather a tax break. If this passes, and you're age 65 or older, you'll be able to deduct an additional $4,000 on your federal taxes. So what does that mean for your wallet? While it's not a literal $4,000 check, for most seniors it could translate into keeping around $480 to $500 more of your money during tax season. Better than nothing, but certainly not the life-changing amount some people may have expected when they first heard $4,000 boost. House Republicans are pushing to pass this as part of a larger economic package, and they want it on former President Donald Trump's desk by Memorial Day. Will they succeed? That remains to be seen, especially given the complicated political landscape in Washington. Now, here's the other side of the story. During his campaign and even afterward, Donald Trump repeatedly promised to eliminate federal taxes on Social Security benefits. He made this pledge several times in front of large crowds and on national media. Here's one of his quotes from a rally in Arizona. "No tax on Social Security benefits for our seniors. And you deserve it." He doubled down on that message during a rally in North Carolina, and even during an interview aboard Air Force One with Fox News' Sean Hannity, saying again, "No tax on Social Security benefits for seniors, which is so great." But now, according to a detailed report from the Huffington Post, it appears that Trump and congressional Republicans are walking back that promise. The article argues that instead of fulfilling the promise to make Social Security benefits fully tax-exempt, they're offering the much smaller $4,000 deduction instead. And there's a reason for that: it's called the Byrd Rule. In short, this rule limits what can be included in a reconciliation bill, a special type of legislation that allows the Senate to pass laws with a simple majority, bypassing the need for 60 votes. Under the Byrd Rule, any changes that significantly impact Social Security or taxes generally cannot be included unless there's bipartisan support. Currently, this tax cut bill only has support from Republicans. Without Democratic backing, the Social Security tax elimination simply cannot be included. Let's break down the numbers. The proposed $4,000 deduction would help reduce taxable income for seniors, potentially saving them about $500 in taxes. For most moderate-income retirees, this is better than nothing, but it's far short of the thousands they would save under a plan that eliminated taxes on their Social Security altogether. According to HuffPost, here's what the math looks like under different scenarios. A retiree receiving $45,000 in Social Security benefits and in the highest tax bracket could save over $14,000 per year if Social Security were tax-free. A senior with a total income of $100,000, split between Social Security and retirement accounts, could save about $8,400 per year under a full tax exemption. But under the current $4,000 deduction plan, their savings shrink dramatically to $1,480 or less. For more average-income retirees, the benefit is roughly $480. So essentially, the more you rely on Social Security and the less other income you have, the smaller your savings would be under either plan, but especially under this scaled-back deduction. Some lawmakers are still pushing to eliminate taxes on Social Security benefits. Representative Thomas Massie has introduced a bill to that effect. However, his bill currently has support from Republicans only. Without Democratic votes, any attempt to eliminate taxes on Social Security faces a steep uphill battle in the Senate. In other words, unless we see bipartisan cooperation, that particular campaign promise could very well be dead in the water, at least for now. Now, let's shift gears a bit to talk about what's happening inside the Social Security Administration, SSA, where there's been a whirlwind of changes. According to Axios and other media outlets, the agency has been implementing and then reversing multiple policy changes under the Department of Government Efficiency, nicknamed DOGE. These policy shifts have led to delays, increased customer frustration, and a serious backlog in claims processing. One major issue was a 3-day hold on telephone claims for fraud checks. While well-intentioned, this policy didn't uncover much fraud and ended up slowing down the approval process for retirement claims. It's since been rolled back. DOGE also tried to overhaul parts of the phone system, but again, backlash forced the agency to reverse course. The Washington Post reported that many of these changes resulted in longer wait times, poor service, and significant pushback from both Social Security recipients and lawmakers alike. Even employees are feeling the pressure. Staffing is down, but expectations are up. According to internal sources, many workers are being asked to do more with fewer resources. One bright spot is the SSA's investment in artificial intelligence. Officials say they are improving fraud detection algorithms to flag only the highest-risk cases. If this works as intended, it could help streamline the claims process, reduce unnecessary delays, and improve overall service. So, let's recap. A $4,000 tax deduction for seniors 65 and up is on the table. While it's not a cash payment, it could save you around $500 during tax season. The original promise of no taxes on Social Security benefits appears stalled, likely due to Senate rules and a lack of bipartisan support. Internal shakeups at the Social Security Administration continue to create confusion, with several policy changes rolled back due to public backlash. New fraud detection systems using AI may improve things, but the jury is still out. As always, we want to hear from you. Do you think the $4,000 deduction is a fair compromise? Or should lawmakers push harder to eliminate taxes on Social Security benefits altogether? And what's your opinion on the changes happening inside the SSA? Are they helping or hurting? Drop your thoughts in the comments below. We value your perspective and will be reading every single one. That's all for today's in-depth Social Security update. If you found this video helpful, informative, or just